Hello and welcome to Business Incorporated live on Channels Television. It's another trading week right here in Lagos, Nigeria. The first trading half of 2025, second quarter of 2025, and the month that's winding down. At this point, hope you're in profit, but if not, keep your eyes here. We'll prepare you for the rest of 2025. But here's what's coming up in the next 55 minutes. The South African rand firmed in early trade today after the release of higher than expected money supply in others. And Egypt's Ministry of Finance announced today plans to begin paying exporters 50% of their outstanding dues in cash. And the US dollar faces historic stress test, kicking off the week lower as Bank for the International Settlements, as BIS issues dire warning on global fragility. And it's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with the markets that we track now, starting with commodities, and that's oil there. We're seeing it's kicking off the week down 0.31%, $67.56 a barrel. US grade there, that's down a bigger 0.35%. And we know all eyes on OPEC Plus at this point. What's happening with output? We're going to find out, definitely. But we're starting off the week lower. Ahead of the August contracts expiry, that's later today, we're seeing the US WTI there trading lower. Last week, both benchmarks posted their biggest weekly decline since March 2023, but they're set to finish higher in June with a second consecutive monthly gain of more than 5%. So even though we've seen turmoil for the past weeks, for the month of June, oil prices are up about 5% so far. Let's get a check on metals now. We see gold, that firm today has the dollar hovered near its lowest level in more than 3 years, while the market's focus, that shifted to a slew of US jobs data that's due later this week. And we see spot gold there, 0.21%, still not above that $300 level, in the $3,000 level. US gold futures up 0.40%. The only laggard for the metals we track, that's spot silver there, kicking off the week down 0.13% at $35, almost $36 there. Platinum looking strong, 2.23%, $1,380 per ounce. And we see palladium also looking strong, $1,173 per ounce. Let's bring in Sunil Dixit now. Let him check his hourglass now to tell us what the charts are saying at this point. I know you look at the charts every day. Great to have you on the show, Sunil Dixit.
Thanks, Larry.
So looking at the week now, we're kicking off the week. We're seeing oil prices there for last week down, but the month of June is not looking bad. Oil should be up 5%. That's for the whole month, at this point. So talk to me about what you're expecting, what the charts are telling you about oil prices going into the second half of 2025 and July.
Oil has been under some risk premium, and currently we witness a range-bound price action between $66 on the resistance side and $63.50 on the support side. So $2.50 range is keeping price action a little narrow, and price is awaiting some triggers, either pulling off of the risk premium, that is the war premium, and Iran risk factor is coming down. So possibly oil prices are likely to consolidate within this range until the breakout happens, either on the higher side above a 66 or on the lower side, that is less likely at the moment, which is a 63.50. Good support is seen at 61.50, which has been holding for quite long, and on the higher side, a break and a weekly close above 66 zone will open the way for, let's say, $68 and even $70 in coming months.
All right, so you're looking at supports there for oil, $61.50. Then I guess the resistance, that's for oil, about $66. I guess a break above that, maybe we see a rally coming there for oil. But let's flip over to metals now. What key levels are you seeing for gold? It's still trading around that $3,200 level.
Gold.
Yes, what are you seeing for gold?
Gold has been undergoing some correctional downtrend for a while after the war premium has receded, and recently we have seen on Friday it has tested 32.55, and today the earliest in session we witnessed a drop to 32.47 and 32.45, and some minor rebound is seen. Perhaps gold is making some local support base around 3250, and another attempt at 3300 is being seen. No bullish conviction is seen until price breaks and makes a sustained close above 3330.
All right, so if we see a sustained close above 33.30, that's $3,330, then we might see gold start off that monster rally again that we've seen in 2025. Thank you so much, Sunil Dixit. He's a technical research analyst at SK Charting. Always great having your positions there in most of these charts. You know how to read them very well. Thank you so much.
Thanks, Larry.
All right, let's get to other stories now. We see the Bank of International Settlements. They've issued a stark warning that the global economy has entered a pivotal moment, marked by rising trade tensions, demographic shifts, and growing fiscal and financial vulnerabilities. Its annual report highlights how the surge in economic fragmentation, fueled by U.S. tariffs and fragmented trade policies, that's straining supply chains, productivity, and trust in central banking institutions. The BIS also flagged increasing risks stemming from leveraged hedge fund activity in bond markets and a concerning slowdown in the dollar's value. These assessments come at a critical juncture with over $111 trillion in global FX swap markets exposed, governments facing rising debt burdens, and central banks operating under growing geopolitical and economic pressure. As the Central Bank of Central Banks urges greater cooperation among global policymakers, markets may be entering a new phase of heightened uncertainty where the fault lines between trade policy, monetary stability, and financial resilience have never been clearer. Also, we see top central bankers are meeting in Sintra, Portugal. The ECB's annual forum in Sintra has drawn global attention as a pivotal gathering of central bankers from the US, Eurozone, UK, Japan, and South Korea to probe the future of international monetary system. At the heart of discussions is a pressing question: is the US dollar's long-standing dominance beginning to unravel? Amid the dollar slide to a near four-year low against the euro, concerns over protectionist U.S. policies, including unpredictable trade tariffs and political pressure on the Federal Reserve to cut rates, that's looming large, with Fed Chair Jerome Powell bolstered by recent legal rulings, is expected to affirm the central bank's independence, but any sign of undue influence could seriously threaten both the dollar's global status and market confidence. So all eyes on that at this point. Well, the National Pension Commission has been exploring alternative investments to better profits on pension funds. Following this, the agency has organized a workshop on investment in alternative assets for chairpersons of board investment strategy and risk management committees of pension fund administrators. The meeting is to offer practical insights into the potential benefits of the alternative asset class and explore how pension funds can effectively leverage these opportunities to mitigate portfolio concentration risk, enhance investment returns, and achieve sustainable growth. Take a listen.
Currently, pension fund assets are in excess of 24 trillion, and majority of those funds are invested in traditional fixed income instruments. We're talking of FGM bonds, treasury bills, all government securities. Now, what we need to do as an industry is how can we diversify that portfolio? One, to ensure that we generate inflation plus returns for retirees and RSA holders, retirement savings account holders. And in addition to that, how do we ensure that pension funds, being long-term capital, can be used to drive the infrastructure development in Nigeria? Because there are great opportunities out there, and the best way we can get real returns for pension funds is to begin to invest in real assets.
And really is to see how we can increase our allocation to alternative assets, to look at the bottlenecks. What are the bottlenecks? What do we need to do? Have those discussions, get a better understanding of those asset classes, hear directly from asset owners, hear directly from advisors, from practitioners, and to see what needs to be done for pension funds to increase the allocation to these asset classes for the benefit of the nation as a whole.
To our first conversation, June 27th, 2025, the governments of Rwanda, the Democratic Republic of Congo, they signed a landmark U.S. brokered peace agreement in Washington, aiming to halt decades-long cycles of conflict that's displaced millions and claimed over 6 million lives. The deal commits both nations to withdraw Rwandan troops from eastern DRC within 90 days, end support for rebel groups like M23, establish joint security arrangements along their border to maintain peace, launch a regional economic framework to attract Western investment, especially in critical minerals like cobalt and coltan, central to global technology and energy markets there. Let's unpack all of this now. Let's talk to Abubakar Al-Hassan. He's a geopolitical and intelligence analyst joining us from our Abuja studio. Great to have you. How's it going, Abubakar? All right, so yes, Abubakar joins us from our Abuja studio. Great to have you, Abubakar. So let's kick off now. We see the accord there links peace to a regional mineral framework. You know, how can investor oversight and traceability systems, you know, mitigates the historical resource curse there that's mostly prevalent in Africa? What are you seeing there?
Thank you very much, Ladi, once again for having me. First of all, let's look at mining. Mining is a very, very capital-intensive project, and ideally, production takes years. Mining companies cannot relocate if there is a conflict nearby or there is an unfavorable change in the political, regulatory, or social environment. This makes mining a very, very risky investment project. In fact, it's even more risky than most investment projects. So any U.S. company that wants to invest, any U.S. company that wants to invest, the question is, will this peace deal outlast the Trump administration? So any company that wants to invest in DRC following this peace deal, those are questions they want to be replying. So I have a few considerations that I think U.S. companies will look at when they want to invest in U.S. mining companies will want to invest in when they want to look at this peace deal. Number one is risk appetite mismatch. Now, the tax of advancing U.S. mining interests in the DRC will fall to the private sector, which have low appetite for high-risk projects in high-risk environment. And the problem DRC has, apart from the conflict and instability, is that it has challenges that impede foreign investment, that impede investment, which include weak governance, road and rail and port infrastructure. I think this is where the Lobito project, which we are talking about, the regional economic integration, comes in. The Lobito project is a railway project that connects the cobalt and the cobalt from Zambia and DRC to the port of Angola and onwards to the Atlantic Ocean to the US and EU. Another position which the US companies will look at is the volatility of product prices. For example, if you are looking at the news recently, DRC have suspended export of cobalt because of oversupply in the international market. The price of cobalt is really low, and cobalt is essential to the U.S. defense industry. So for U.S. mining companies that want to invest in DRC, the question is, will they want to have new projects or invest in existing projects? Because if you invest in new projects, which means it will take a while for you to regain your capital cost. Whereas when you invest in existing projects, those projects, they've already made money from their capital cost. So these are the issues that U.S. will be looking at, U.S. companies will be looking at in terms of traceability of their investment as a result of this peace deal.
And talking about, the U.S., mining companies coming to do business there, critics argue that the U.S. is negotiating access to minerals like cobalt and coltan. Could this deal turn into a new form of neo-colonial resource exploitation, echoing some of the past patterns we've seen?
So before I answer your question, let's take a look. Let's go back to how this peace deal came into place in the first place. In March 2025, amid escalating conflicts between the DRC and the Kenyan-backed M23 in the eastern region of DRC, the DRC government reached out to the U.S. To propose a mineral for security deal because they saw that as a way of the U.S. helping them to defeat the M23 rebels and to achieve peace in the country. They took a leaf from the Ukrainian mineral security deal and tried to leverage U.S. interest in mineral security in mineral resources to help them defeat the Rwandan-backed M23s. Now the question is, the statement is DRC is very, very rich in mineral resources like cobalt, coltan, tin, and all that. For this peace deal, it will likely see the DRC foregoing revenues from mineral processing from U.S. companies in exchange for military and financial assistance. So this will entail military assistance in terms of training, equipment, and other forms of financial assistance. This is in contrast to what we saw in the French-dominated colonies, whereby France controlled the factors of production, distribution, and exchange.
All right, so U.S. interests and geopolitical implications now, let's look at that. In what ways does, tying the deal to U.S. mineral access, shift the balance of global influence away from China? China there, they have eyes, in Africa, at this point. How does that work?
Yeah. So a U.S. involvement in DRC mineral sector, it will allow them to do two things. Number one, it will allow them to diversify their critical mineral supply chain and reduce independence from China, thereby strengthening their energy and defense industry. Number two, it will also fall into their strategy of reducing the economic dominance of China in Africa. But there have been reports that DRC granted, behind the scenes, DRC granted exclusive right to U.S. for mineral resources. However, I don't see how this will be true because there are other foreign actors with property rights that are mobilizing for ongoing projects in the DRC. And by doing so, will put further foreign investment in their mineral sectors in jeopardy by just removing it and just giving it to the U.S., giving exclusive right to the U.S. Moreover, it is unwise for the DRC to replace China's dominance with the U.S. dominance. The prudent thing to do to mitigate risk is to diversify interest and investment in the country.
All right, so could the U.S.'s transactional approach, exchanging peace for resource concessions, could that undermine, its credibility as a neutral mediator here?
Daddy, this is a very, very important question. And I want to crave the indulgence of your viewers before I answer to go and look at my podcast, Geopolitics with Abudi, episode 2, which had to do with what Africa can expect from the Donald Trump presidency. Now, for U.S. politicians, be it Republican and Democrat, they are predisposed to surrendering resources for the global dominance of the USA. But for Donald Trump, he doesn't see, he sees global dominance in monetary terms. That is why he has cut fundings to international institutions. And then we are now seeing that in Africa, US ambassadors in Africa will be judged by how many deals they can sign for the USA in what we term commercial diplomacy. So for the US, it's no longer interested in being a neutral mediator. The US is only a neutral mediator to the extent that its geopolitical interests and economic interests are protected.
So, definitely we've seen a very dramatic first half, of 2025. I know you're always keeping tabs with what's happening with geopolitics. What are you seeing for the second half of 2025? Is it going to be the same thing where we've been seeing so far when it comes to geopolitics?
Well, we are going to see, let me start with West Africa. As I always said, I've always maintained in my podcast, Africa is going to play a very, 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 very important role. So because we are now where there is a scramble for the resources of Africa, which is likely going to intensify as the US-China economic competition continue to intensify. We are going to see it trickle down to China. For example, this deal that we've seen that US have signed with DRC, the US have an interest in making sure that African countries do not fall into the geopolitical sphere of China, US, and Russia in order for it to gain geopolitical advantage over it. So that's what we are going to be seeing in the next 6 months. We are going to see more intensification of great power politics in Africa.
Right, and you did mention this the scramble there for Africa. So talk to me, how can Africa, profit from all that's playing out, so far? So we don't see the resource curse, continuing at this point.
Well, to answer that, Africa needs to, we need to also move from, because when it comes to Africa, what they normally see is extraction. So for Africa to profit, we need to first of all try and start moving from production to packaging to make sure that we are not just we are improving our own value in the value chain, to make sure that we are also producing and also competing in the international market. That is the only way that our currency the standing of Africa will improve, and our currency, the value of our currency will also improve and give us a geopolitical strength in the global affairs.
Right, we do need that strength right now. But thank you so much for helping us unpack this. And also, Abubakar Al-Hassan is a geopolitical and intelligence analyst. Thank you for joining us today.
Thank you very much, Ladi.
All right, let's get a check on what's playing out in the markets. That's after this break. Do stay with us.
We live in an era of mass.
All right, let's head straight to the markets now. We have Anete Edet with the details at this point of what's playing out with most of the markets that we track. Great to have you, Anete. So first half, 2025, that's winding down. June, winding down. Second quarter of 2025, winding down, at this point. And, definitely trades have been made. Some investors have made money, some have not. But what are you seeing for these markets so far?
Well, Ladi, before this month began, we were talking about the month of May being the best so far for the first 5 months.
Right.
But now, lo and behold, we're at the end of the 6th month, and I can tell you that authoritatively that it is so far the best month within the first half of the year. 7.4%.
That's for June.
That's for the month of June.
So June is beating May.
June is actually outpacing May.
Right.
And then bringing that has actually made the year-to-date gain to surge to about 16.6%. Just last week, the market gained over 2 trillion naira.
All right. So in May, investors did not sell in May and go away. Then for June, they didn't prune.
They didn't prune in June.
They didn't prune in June.
As a matter of fact, that's when the market's benchmark index, if we can have that on the screen first, jumped all the way from 100,000 points, which we had said back end. We talked about the market maybe hitting 120, and of course, in line with that, our expectation, it did cross into the 120,000 points.
Right.
And as of last week, the tail end of Friday, we saw that. Well, it was a 2-day consecutive profit taking there, which
right.
the market's benchmark index receded to about 119,000. But at intraday, take a look at the number. It's back at the 120,000
level.
Just a few hours from now.
But just a quick one now. You know, we're seeing the stock market is doing incredibly well. The all-share index is on price discovery.
Exactly.
You know, at this point, hitting new highs. Investors are making money. You know, at this point, and I'm sure some people will be watching us right now, the average guy on the street, and looking at this now and seeing that some people are making money and he's not invested, he's not made any money from this, and he's feeling the pinch of inflation and currency devaluation and all of that. But we see the stock market rallying, but not in the pockets of the people.
Well, I think it's time for newbie investors to just come into it, into the market, because this is where most of the money, if you had put in your money, I mentioned just back end there that I was surprised that the price of Presco had climbed to about 1,000 naira per share. Once upon a time, it was the likes of Nestle, Seplat, and maybe one of the other listed equities that were in the $1,000 naira per share pricing. But
so we have
Presco has joined that,
yeah.
and this is just a reflection of all the price increases from the equities. As this is a gauge of all the equities that are listed on the NGX. So this is more like the benchmark indicator showing you that it's a very strong performance.
The barometer of the economy.
Barometer of the economy. So if you don't know where to put, and it's an easy way to make your money. So you just put your money there. It's not like the Ponzi scheme that you'll be, you'll be cheated out of your money. You will put your money here. Just watch, consult your stockbroker, and consult the market.
Consult, do your own research before jumping in.
And then take advantage of the milestone gains, because I'm going to say that I expect that today is the final day of June. But starting from July down to the 31st of December, I'm seeing that this market is likely to climb above this number into most likely a 150,000.
150.
Index.
All right, you heard it here first. Anita's crystal ball says 150 might be in the works at this point. Thank you so much.
Okay, so Ladi, so let's talk more about the other markets. All right, so I'm just so excited about talking about the Nigeria stock market, which is just on its pace to still becoming one. Well, it has been maintaining that status as one of the world's best performing stock market. You just got to charity begins at home, so you got to give it to your home. But let's talk about the Johannesburg Stock Exchange All-Share Index. It was also up at intraday 0.74%. This is as the markets are all counting down to the final trading minutes, a few minutes, or maybe just about an hour. That's for markets on the African continent. So 96,572.81. So Johannesburg Stock Exchange All-Share Index is just following Nigeria's All-Share Index closely, trying to get to that 100,000 index level. But let's see how the other markets, the other two markets that we track. For intraday, well, the only laggard there was the Egyptian Stock Exchange All-Share Index, EGX 30, down by a tad, 0.01%, but this is just at about over an hour ago. While for the close of Friday's trading session, we saw Nairobi Stock Exchange closing Friday in the green, 1.71%, and then that market will be open later today for trading. So that's a wrap for the market. Okay, now let's talk about the financial markets, but this time we're looking at the forex market and as well as the debts, Nigeria's debts. Last week, we saw reports from the Debt Management Office that said that Nigeria's debt profile has climbed up to about 149 trillion naira, which is as at the end of the first quarter of this year. That was the latest report released over the weekend from the Debt Management Office. And at the same time, we also see that the country's forex reserve, that's the country's external buffer against when the central bank wants to intervene in the forex market and do some other payments. That's the forex level has declined to about $37.41 billion. This is as at June the 25th, marking the 6th consecutive decline in the week. So we get a feel of why this is happening so far, because there was no intervention from the central bank last week. So now let's bring in Akpewa Oputu, chief dealer with Lotus Bank, to give us insight into these two factors as well as the intraday numbers. Thank you for joining us, Akpewa.
Thank you for having me on the program today.
Okay, so now let's talk about the FX market first. The FX market is wrapping up. Last week we saw that decline, as well as the financial, the trading from the forex markets. Can you give us a sense of what's happening at the market, or what happened last week?
Okay, so if you had been following the country's FX reserve, you will notice that week on week we've seen about $293 million decline from where it was last week and where it is today, as at the recent data published. What we noticed in the market was that the CBN came into the market and they were able to redeem most of the FX forwards that were outstanding before the current administration. So we had these backlogs, and the investigation by the central bank was ongoing to see whether these forwards were actually genuine, and they've gotten out some of the results out. So they were able to pay about $283 million out to the various banks that had some of these forwards outstanding, and that's why you see a decline in the FX reserve. But when we look at the market, the current trading on the FX, we've seen the rates actually drop week on week. We've seen Naira appreciate from where we were last week to where we're currently trading, around 1,530 Naira to the dollar, coming from 1,545 where we were last week. So we've seen improvement in the FX market.
Okay, so now when you talk about the improvements in the FX market, should we expect that as we cross over into a new week, that would be seeing some improvement for the Naira as well as the dollar reserves level and for transactions within the forex markets?
Yeah, so we've seen a lot of internationals come into the market. They're actually playing in our market. We've seen the rates in the fixed income security actually at high levels, at 20% levels. So we have these internationals coming to the market willing to offload their FX at these levels. The market is very transparent now. There's a lot of FX liquidity in the market. So you see the fact that you can actually come into the market where you have willing buyers, willing sellers able to sell this fund, it gives the international community a lot of confidence in the market. So we see them bringing these inflows into the market and converting their funds to Naira liquidity, where they can buy fixed income securities. Africa has one of the highest interest rates, paying as high as 20% on your OMO maturities and the NTB bills. So we've seen them play a lot in that market. We'll continue to see these rates actually decline. I think it's very good for the federal government, because most of our external reserves, about 48 billion of our external reserves, if we choose now to unwind some of those positions, we can actually source for this FX at a lower rate. The budget of the country is at 1,500. Currently, market is around 1,530. So if we continue to see these rates go down, go where to the government has placed this budget, then they'll be able to come out from some of these debts which the country is in right now.
Okay, now thank you for mentioning that debt. That the country's debt, which has ballooned to about 140, almost 150 trillion naira, and with the government's borrowing plans, which Q2 is already over. So what does this tell us? Are there any underlying dangers, or is there anything to worry about with this current level of the country's debt for governments?
So like you mentioned, with the recent publication, Nigeria's debt increased to about 149 trillion. So this is about 27 trillion from last year, 2024 quarter. So we're looking at quarter on quarter, first quarter of 2024 against first quarter of 2025. So we saw an increase of about 27 trillion. But last week we heard from the Minister of Finance, Mr. Wale Edu, saying that the country has also been able to generate about 6.9 trillion in revenues from taxes and all of that. So in as much as we've seen this increase in our expenditure, we're also trying to get these funds from taxes, which this new administration is actually coming out. So what we expect is that net we will see a new effect in our borrowings. As much as they continue to rake in these taxes, these revenues, a lot of other ministries and departments and agencies are still yet to release their tax results. So by the time we see all of that, I think what we will see will be a net increase in the government expenditures.
Thank you so much for your time on the show, and hope to see you in the month of July, which is just about some few hours away. Thank you so much for your time on the show.
Thank you, Annette.
Okay, so from Africa, let's move over to the Middle East. These are the only two at intraday in the green, the Dubai and the Abu Dhabi index, both on the United Arab Emirates, 0.53% and 0.70%. Lots of bargain hunting by investors there, and there's coming amidst fluctuations in oil prices as well as so many other factors as far as that country's economy is concerned. But on the other side is a flip for the Saudi Arabia and the Qatari stock exchange exchanges. That's the Tidal Wall for Saudi Arabia and the Qatari stock exchange, both down. This is a negative, a flattish negative, while the Qatari stock exchange down by 0.17% there. We see some profit taking at intraday, but hope that market will rebound maybe at the close of today's trading session. Okay, so now let's fly over to the United States. And we see that the stock futures there, they're rising. As this is the month has been so far. So it's not just Nigeria's stock market that has been the green so far in the month. The U.S. stock markets, the Dow Jones Industrial Average, the S&P 500, as well as the Nasdaq, both in the green. And for the month, the S&P 500 is up by 4.4%, while the Nasdaq, that's where all the tech giants are listed, is up by 6.1%. Which is the biggest so far, the techs. You have the Meta, you have the Nvidias, you have so many of the Googles, the Apples, all are making their imprint there. So far, 6.1% for the Nasdaq this month, and for the Dow Jones Industrial Average, it has added 3.7 month-to-date gains so far. And this is coming in the midst of so much of issues as regards the trade talks from Donald Trump, which has also boosted investor confidence there. But speaking about U.S. President Donald Trump, the investors will be keeping an eye on whether the Senate will be able to pass the President Donald Trump's one big, beautiful bill. And if passed by the Senate, the package, which narrowly missed a procedural vote in the Senate on Saturday, faces an uncertain path in the House. That's because some lawmakers have balked at revisions in the latest version of the bill. That bill, of course, has been criticized by his friend Elon Musk, who is also a billionaire, and that's coming a second time that he will be criticizing Mr. Donald Trump's bill. Now let's talk about the markets in Asia. Asian markets, they were mostly in the mix. Take a look at it. Japan's Nikkei has crossed back into the 40,000 level. This is an 11-month high. It was up by 0.84%. And this is coming in the midst of a slew of data releases across Japan, as well as for China. We see South Korea's Kospi index up 0.52%. We see lots of gains from Samsung, SK Hynix, LG, and so many others listed within that country. Hang Seng is down 0.87%. Let's take a look at how China's index, the benchmark index is Shanghai Composite, is up 0.54%. And this is coming amidst reports that the country's manufacturing recorded a third month of contraction, while for the Nifty 50, down 0.47% for the close of Monday's trading session. So, Ladi, that's a wrap on the markets across the world.
All right, so much to unpack there. See you in the second half, I guess, of 2025.
I'm going to say a happy new month, happy new quarter, happy second half year. We always have to be happy.
So many happies at this point. Thanks so much, Anita, there for the details about the markets that we track. But let's move over to Europe now. Look at markets there. Lars Holter joins us now. Great to have you, Lars. What are investors looking at today?
Yeah, thanks for having me, Ladi. Good to be with you. Well, you know, the day started in the green here, but then you could really say the market lost its oomph here when you look at London, the FTSE, or here in Frankfurt. We're about 0.2% down, and the CAC 40 over in Paris, literally at this point, unchanged. There's really not much going on in the markets, but there's a couple of things investors are looking at. Canada and the US, now we've heard, are inching closer to a trade agreement or whatever form of document they can produce to make Donald Trump happy over at the White House. Now, from a European perspective, some are hoping that they will get a deal done too. So there's one reason for, I would say, a generally more upbeat mood, even though it's not really showing in markets right now. The other big topic, the ECB is meeting in Portugal starting today. There won't be any interest rate decisions made, of course, because this is not a regular interest rate meeting. This is their annual retreat, but there will be a lot of talk about the current economic environment, and investors obviously will try to parse everything we get out of that event. But as I said, Ladi, for now, markets are looking at all these topics, but they're almost unchanged right now, a little weaker. That's the beginning of this new trading week right now.
Right. I guess with the deals, as you're trying to make Trump happy, you need to get a good deal, for yourself, at this point, talking about trade. But in other news, the German government has raised the minimum wage in the country. What can you tell us about, how this went down? I guess that's good news.
Yeah, indeed. Ladi, the debate over the minimum wage had been going on for a while. Here's some numbers for you. The minimum wage will go up from a current €12.60 to €13.90 and then €14.60 in 2027. Now, that's a raise of 15% over 2 years. That is not bad, and it's definitely way above current inflation rates. But people had actually been hoping for even more, a flat €15 right away. That's what Social Democrats had run on in this last campaign just a couple of months ago. And it's what economists had also said would be reasonable given the current economic environment. Now, in the end, an independent commission looked at the needs of low-income earners who urgently needed a break and a chance to catch up with inflation. But they also looked at employers who worried that with higher wages, their products and services might go up in price and that they might indeed lose customers over it, all the way to them potentially cutting back on jobs, which again would have been detrimental to the well-being of those on the low-income spectrum. There were, like hairdressers, restaurant owners, caregivers. Many of them are paying minimum wage, and they were indeed worried that too big a raise would present huge problems to them and potentially even damage their business.
Right. I guess, it sounds good getting a minimum wage raise there, but can the companies cope, at this point? So is everybody happy with the compromise the commission reached?
Yeah. No, of course not. Nobody is ever happy. Of course, that comes with the territory here, Ladi. Some economists are still saying that €15 right away would have been prudent, and the Green Party is actually saying that they keep fighting for it to maybe change it and still find a way to apply political pressure here. On the other hand, there were, like I said, these employers right away who said they're worried that they had to raise prices and that customers might stay away. But Ladi, let me tell you, who is definitely happy? That would be the government, because they are the biggest winners. It is estimated that 6 million Germans will be benefiting from the higher minimum wage, and that means that they will need less help from the government. That means Berlin has to pay out less, likely to the tune of several €100 million a year. Count in, of course, higher incomes to be taxed. And taking it a step further, let's assume that more people will catch up and get to participate more in the economy. That would all just increase GDP and, by extension, of course, the tax base. That's if those estimates by most economists hold up. Of course, if employers would have to cut down on jobs based on higher wages, that would end up costing the government, but it looks very much like much of what we've heard in this regard is hyperbole, and that the final effect of a higher minimum wage will actually be a very positive one for the economy and for the government.
All right, thank you so much, Lance, for bringing us up to speed there, what's playing out in Europe. Thank you.
Thank you, Ladi.
All right, let's get a check on all the stories now. We see the South African rand that firmed in early trade today after the release of higher than expected money supply and private sector credit figures and ahead of the trade and budget balance that's due later in the day. We see the rand traded at 17.69 against the dollar, up about 0.6% from Friday's close. Central bank data earlier showed South Africa's money supply growth last month was up 6.86%, up from 6.12% in April. Credit growth for May came in at 4.98% from 4.60% in the previous month. And Elon Musk's satellite internet venture Starlink is exploring a 2 billion rand, $113 million investment in South Africa, according to reports from Bloomberg. The investment is intended to build satellite infrastructure serving not only South Africa, but the entire 16-nation Southern African Development Community, that's SADC, including using local firms for construction, fiber deployment, energy supply, and maintenance. The move signals a bold strategy by Starlink to navigate South Africa's black economic empowerment as B regulations and secure long-awaited licensing by front-loading capital to meet empowerment objectives and support regional digital connectivity. Starlink is positioning itself ahead of South Africa's hosting of the G20 summit this November. The final decision now rests with the Independent Communications Authority of South Africa as Starlink pushes to formalize operations in Africa's largest economy. And the Egyptian government has unveiled a new initiative to settle exporters' outstanding dues amounting to nearly 60 billion Egyptian pounds by paying 50% in cash starting in the current fiscal year 2024-2025 and spreading payments across 4 years up to 8 billion Egyptian pounds annually, according to an official statement. Under the scheme, the remaining 50% of dues will be offset via a clearing mechanism against exporters' existing liabilities to tax, customs, electricity, and gas authorities, marking a major reform in Egypt's support for exports, the export sector. The move aims to enhance cash liquidity, restore trust among exporters, and improve Egypt's global competitiveness, coming on the heels of earlier arrears payments totaling about 70 billion Egyptian pounds to over 2,800 exporters between 2019 and 2024. This package lays the groundwork for a broader export support program launching in the fiscal year 2025-2026. And Egypt's economy showed a robust expansion of 4.77% in the third quarter of the 2024-2025 fiscal year, marking a notable acceleration from 1.2% figure in the same quarter last year. The Ministry of Planning credited a sharp 16.3% surge in manufacturing output as a key driver, a dramatic turnaround from the 3.9% contraction recorded in the third quarter of the financial year 2023-2024. This growth snapshot comes amid Egypt's broader push for economic stabilization, following a series of reforms, including a currency float, fiscal consolidation, and enhanced foreign investment. The strong performance in manufacturing suggests the country may be emerging from its recent financial crisis and reshaping its growth trajectory under Egypt's Vision 2030. And key satellite internet landscape is undergoing a significant transformation driven by shifting market dynamics and emerging competition. According to a recent sector report from the Communications Authority of Kenya, Starlink's subscriber base declined by over 2,000 users in the third quarter of the fiscal year, that's 2024-2025, reducing its share of the satellite internet market from 1.1% to just 0.9%. Meanwhile, traditional providers are capitalizing on the shift there. Safaricom strengthened its position, boosting its market share to 36.5%, while local ISP Jami Telecommunications expanded to 22.5%, and Dimension Data Solutions East Africa edged past Starlink into the top 10. So that's how the market share is looking right there in Kenya. All right, let's get a check on what's playing out in the crypto market to end this month of June. And the second quarter, we see it's mostly red on the screen there with Bitcoin there. That's a big boy in the market there, 0.47% there down. XRP down 0.62%, but we see Ethereum, that's in the green, about 0.43%. There. Let's look at some of the headlines now. Japan's Metal Planet Inc. They've intensified their aggressive Bitcoin strategy, acquiring an additional 1,005 Bitcoins and issuing about 30 billion yen in zero-interest ordinary bonds to expand its holdings even further. The Tokyo-based company disclosed the move in a public filing that's today, confirming that it spent about 15.64 billion yen. Then we also see their crypto liquidity that returned in the first half of 2025, rising to a new record on a mix of tokenized assets led by stablecoins and real-world assets. That locked liquidity, that was about $375 billion there. That's total value locked there. Then we see crypto inflows, that surged to about $2.7 billion last week, extending an 11-week streak with Bitcoin leading the charge at $2.2 billion there. So those are the top headlines in the market. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide. How's it going?
Hello, Ladi. Good afternoon. It's fine. Yeah.
Fantastic. It's great to have you, Olumide. So, yeah, it's been quite the first half, of 2025. From what you're seeing so far, how would you describe Bitcoin price action, Ethereum, in the first half of 2025?
Ladi, from a macro level, I think it's been amazing. The first part of this year when we saw Bitcoin oscillating at a record high, despite early fears that Bitcoin was going to retrace back below the 75,000 mark during the April 9th sell-off, and the recovery has been so great that even institutional stocks like Coinbase, they hit record high last week, and that just really affirms the excitement in the space. Also, we saw increased allocation in Bitcoin in different markets, particularly Japan, via Meta Planet. We're seeing other institutional players, including President Trump investment firm, planning to go into Bitcoin. So it's a market that's really evolving, but I think Bitcoin has set its pace in the digital asset class as a pioneer crypto asset. However, I think it's been mixed bags for the altcoin market, and that has really shown with Bitcoin dominance at oscillating at quite high levels. When you look at the fact that Ethereum is still down from its January high, you also look at the fact that many of these altcoins have not recovered, particularly meme coins. The rug pulls, the SEC misinterpretation about the SEC interpretation that these asset classes don't really have value has really weighed on that space, and you could see that many of these assets are still down by 50% if you consider before President Trump comment. So yeah, lad, if we look at it from Bitcoin macro, I think the market is really solid. Bitcoin really needs to stay where it is, and it's really going to break the monthly close for June. Also, if you look at inflows is really going all cylinders. BlackRock still has so much Bitcoin. I think last time I checked, over 1 million Bitcoins. Laddie, look at MicroStrategy. Between MicroStrategy and BlackRock, they hold more than 1 million Bitcoin. And when you look at the total amount of available supply, and you see increased buying in this space, while the Genius Act is coming to play, we expect the House of Rep to pass that into law. Whether that comes into law it really means the banks will step in. And when banks come into that space, liquidity will burst in. So it's a lot to leave out, but I think many coins are going to wither by the way, Ladi.
Right. I'm talking about withering away. At this point, we were seeing the big boys, institutional investors there accumulating all of that Bitcoin with Meta Planet there, buying about 1,005 Bitcoins at this point. So who's accumulating altcoins? Are the big boys looking at any of these altcoins at all?
Yeah, we've seen. That's why if you look at Ethereum's latest price action, you see that by this time in the morning, sorry, yesterday, it was really looking like it was going to break above the 2,500, and indeed, and you look at as we speak, is really back below, and that's because we saw few institutional investors talking about adopting the strategy of holding Ethereum. But when you look at the data for this year, also it's been bad in terms of hacking. The worst amount of capital loss in the crypto market happened first time this year, in the first half of this year, and largely because of the Ethereum theft that was allegedly sponsored by North Korea. You recall that Bybit lost about $1.6 billion worth of Ethereum, and that really affected the asset class price action. So it's fragile for the altcoin space. XRP is still lingering. The case is not yet closed. The judge cancelled the or ignored the SEC Ripple settlement plan. It means they really have to go back. And you look at Solana also, the meme coin excitement has watered down, so it's still half from its record high, despite the excitement in that asset class. So I think the pump action for the second half is stablecoin integration, Bitcoin's traditional acceptance,
Okay.
and more inflows into the blockchain technologies.
All right. Wait and see at this point. Thank you so much, Olumide Adesina, for breaking it down for us. Thank you.
Thank you, Lady.
All right, so there you have it, and definitely we're going to keep you up to date on what to expect. That's for the second half of 2025. Where do you go as an investor at this point? Keep your eyes here to find out. Thank you so much for watching today. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.